Welcome back, folks. Again, John Najarian. I am back in the States, up here in Milwaukee, Wisconsin, and glad to be bringing you 3 at 3. And I think you know the drill. 3 at 3, we present to you what our heat seeker algorithm has ferreted out, and it has been vetted through our team of analysts, as well as myself and Pete. And we have picked out several. I'll give you 4 actually today. Special. I'll give you 4 because I'm just feeling generous. So let's get started with today's 3 at 3, beginning with IYR. So IYR is an ETF and it tracks bonds and so forth. Well, with interest rates going up, that means bonds down. And whether it's HYG, the high yield bonds, or others, generally speaking, when interest rates are going up, that's not the time that people get all giddy about their bond holdings because they're losing money because, of course, rates up, bonds down. On the other hand, many people might want to lock in a 4.4% rate on the 2-year. I'm not giving advice, but I'm just saying the IYR, we've seen the 81 puts be bought rather aggressively today. How aggressively, you ask? 8,000 of these September 81 puts that expire the 30th of September. So not this Friday. No, I'm sorry. So that is this Friday. I'm missing because I guess just traveling too much. But that is this Friday. So only 4 days hence, we will experience the September 30th expiration, and these puts were purchased paying about $1 for 8,000, which is 800,000 share equivalent. Second trade, IWM. This is, of course, the small caps. We have been killing it with these put readings in all of the indices, from the IWM to the QQQ to the SPY, and in this case, they're buying 41,000 of these puts, folks. So that's the November 116 puts. 116. I am stunned how low they went for these. But nonetheless, if you're going that far down, this is not something you would buy for any protection, because the IWM, even though it's down big, is at 164. So you're talking about a significant collapse in the market. Am I predicting that? No. So what I am doing is buying the at the money put and selling downside puts against it, 1-to-1. Again, that's not advice. That's what I'm doing. But by doing that, I control the downside of the IWM for that differential between those 2 strikes that I pick. And I'll be able to profit yet again, hopefully, from a downside move in the IWM. They bought 41,000 of the 116 puts that expire in November, 3rd week in November, right before Thanksgiving, which would be a pretty ugly Thanksgiving if we get anywhere near 116 for the IWM. But somebody buys 4.1 million share equivalent. I want to know, and I figure you do too. Next one, take a look at Workhorse. That's WKHS, Workhorse. And this one is a $2.70 stock. They're buying the 250 puts. Ouch. So they're saying more downside for Workhorse. They're buying the 250 puts that also expire this Friday, 4 days hence, September 30th. Ouch. All right. They bought those puts at about 12:35 today. 12:35 was the time. All right. Last and final, let's take a look at LAMR. LAMR bearish puts, November 70 puts, with the stock trading at 82.5. So 82.5, and they're buying the 70 puts. So 12 points of downside between now and November expiration, because these are November expiring LAMR puts at the 70 strike, with the stock trading 72. So pretty big downside bets, folks, all across the board. I am John Najarian. I appreciate you guys joining us. Please join us for the Rebel's Edge tomorrow. That will be at 1 p.m. Eastern Time. I hope you can join us then. 1 p.m. Eastern Time. Pete will be back with The Take at 10:30 a.m. Eastern Time. And tomorrow I'll be back with 3 at 3 from the studio. See you then, folks. Have a great day.